Morning, Jeff. I think we're glass half full, actually. I mean, a lot of this is to do with the reflation trade and obviously higher inflation expectations. But the reality is that I don't think any central bank is going to allow medium-dated or long-dated yields to escalate such that it would actually threaten the servicing of the huge amounts of debt that are accumulating around the world. It would be absolutely suicidal. Now, last week, there was talk that the Australian central bank was very active. Meanwhile, the Fed appeared to be half asleep. But actually, earlier this week, Lael Brainard came out and said that she was monitoring developments and hinted that QE was going to stay in place and bond yields came back down. So I think this is a bit of a battle going on between traders, and central banks just need to step up and kill this one off. There is no way that long dated yields can be permitted to increase. It's going to mess absolutely everything up and completely screw up the recovery as well. So I as an investment manager, I guess, have faith in the authorities to suppress this particular move. I think you bet against treasuries and government bonds at your peril.
Julian, I just get you to look into the lens. I understand you're probably looking at a picture of your screen so you can see us, but if you just look directly into the lens, that'll just help a little bit. But let me pick up on that, because it does raise a broader question about, are the central banks firmly in control of the yield curve and the yield at this point?
I think they are if they choose to be. I mean, all it takes is some firm signalling around quantitative easing, and that's the end of going short treasuries effectively. So I think some stronger signalling from the central banks, particularly from the heads of those central banks, I think would be very, very effective indeed. At the moment, certainly the Fed, we've had this sort of, not to diminish Lael Brainard's status, but the B team has come out and sort of skirted around the issue. But I think we need Jerome Powell to come out and say, the 10-year yield is just not going to get out of control. We cannot afford to do this. He's supposed to be, coordinating, I guess, in a way with Janet Yellen on this act big and this enormous fiscal stimulus. But it undermines the fiscal stimulus if the 10-year yield is just creeping upwards and upwards. It's going to threaten the recovery further down the line.